Hi friends, in this video I want to speak about 3 stocks that are showing very good signs of buying opportunities, and I'm closely tracking them in this huge pressure that the market is undergoing right now. If you're new to my channel, don't subscribe just yet. Watch this video for next 5 minutes and then decide. Stock number 1 is Tata Motors. Have a look at my screen and you will see in the last 5 years Tata Motors has given close to 480% returns. But more importantly, if you see, the stock picked up from Jan 2023 and gave a massive rally. If you look at the last 1 year returns, it has given close to 100% returns. 97% up is what it has gone in the last 1 year. But in last couple of days, the stock has been down close to 8 to 9%, and many people are jumping to buy this stock. But please hear this commentary out. Very important for you to understand. This may not be the buying price that you want to get into this stock, and I will explain you the rationale for that. First $1,000,000 question: why the stock is correcting? Is there a more correction coming up in Tata Motors? So for that, if you look at my screen, you will see that the company has recently declared their Q4 and full year results, and you will notice that revenues highest ever, EBITDA highest ever, business net cash highest ever, PBT highest ever, dividends highest ever. If you look at the debt, you will see that debt has come down massively for Tata Motors. Tata Motors Limited India is now debt free, and Jaguar Land Rover is going to be debt free by this year. Very good story from a debt perspective as well. If you look at the consolidated trend, you will see ROCE that had bottomed out in 21-22 is now shooting back up to 18%, which is amazing. Free cash flow is all-time high. Everything is looking hunky-dory. So why all of a sudden, after the quarterly results were announced, why the Tata Motor has come down, and more importantly, is there more correction coming up? So 3 reasons you need to understand that nobody's speaking about. Have a look at my screen and you will see that there are 3 business operating units for Tata Motors. Jaguar Land Rover contributes around 66% revenue, while Tata Commercial Vehicles, which is trucks and buses, contributes 18% of the revenues, and Tata Passenger Vehicles, basically all the cars, contributes 12% of the revenues. And this is very important point, because very recently one of the main reason of the stock prices coming down was that the growth in Tata Passengers Vehicle is going to slow down. Let me show you the commentary here. What the management is saying in 25 is that market growth for passenger vehicle is going to slow down. There is high channel inventory, meaning there are a lot of cars right now parked in the dealer network. Therefore, the demand for the new cars is going to slow down this year. But please understand, this is 12% of their revenues that passenger vehicle is contributing. It is not a huge deal, but there are few other factors that we need to understand. Let me now move to point number 2, which is Jaguar Land Rover. One thing you will note in Q4 results here is that their profit before tax was 661 million GBP. And their profit after tax is 1391 million GBP. Tell me which P&L account will show you that, because profit after tax needs to be lower than the profit before tax, because you're paying tax. Here the number has doubled almost, and that is why they are reporting highest ever profitability quarter. Is there some kind of scam going on? Absolutely not. Tata Motors is a company that will never do such things in my view, but we need to get to the bottom of this. While I was reading the management commentary in the detail, what management said is that for Jaguar Land Rover, between 2019 and 22, they were making losses, and therefore there is an income tax relief they are getting, and that relief is around 1 billion GBP. That is a huge number. So if I were to remove that one-off P&L benefit that the company got, 1.3 billion of profit after tax will come down to only 0.3 billion GBP. Many people don't even understand it. All they will see in the news is highest ever quarterly profits. But please put this in perspective and understand that there is a one-off profit after tax of 1 billion GBP. And the third reason that I see from Jaguar Land Rover's perspective is that their profit before tax has gone from 368 to 661, and majority of that contribution of 267 is coming from material cost reduction. Raw material costs were down in 2024. Maybe investors are not seeing that trend in 25. Therefore, there is this correction happening. Okay, so Rahul, now we understand the reason for the correction. What is the future prospect of this stock? Let me give you 2 simple points that you will understand. Point number 1 is that their PV segment is going to see slower demand. So this 12% of revenues that is coming, it will slow down. Tata Commercial Vehicle, we see 18% of revenues coming from that segment. If I read the commentary, you will see what management is saying is that even for Tata Commercial Vehicle, Q1 is going to be slow and Q2 it might pick up. This is what management is saying. So what does this mean is that essentially in Q1, Tata Passenger Vehicle and Commercial Vehicle both are going to be down from a volume perspective. So their revenues and profitability is likely to see some hit. While if we look at the JLR business, which is contributing the 66% revenues, you will see that they are planning to launch new models, Range Rover Electric, Range Rover Sport and Defender Octa. And just to put this in context, you will see that Range Rover and Defender has been their highest selling models. If you look at Discovery, Jaguar and many other models, Range Rover and Defender have been their fastest selling models. And this Range Rover Electric that they are planning to launch, if I show you some data, you will see that already 33,000 people are sitting on a waiting list to get this car. So in my view, JLR is going to do really good in future as well. Secondly, if you see the Range Rover Sport model, what the company is saying is that they are going to push the price points up. In fact, they did customization on that car for 30 vehicles and they charge 330k, which is almost 130k more than the standard price, which is 202k. Lastly, their Defender Octa is likely to be a big success for them, is what their management is saying. So what is likely to happen in Q1 and Q2 is that JLR business is going to report good growth. Their commercial vehicle and passenger vehicle is not going to report very good growth rate. Therefore, we might see dip in their profitability for a short while. It's a short-term phenomena due to which we might see some sell-off in this stock and there will be enough buying opportunities at that time in my view. Also, let's not forget that Tata Motors is going to demerge their passenger vehicle and commercial vehicle. Just to give you 10-second commentary, Jaguar Land Rover plus Tata passenger vehicle will become one listed company and Tata commercial vehicle will become separate entity. They also have their EV subsidiary and they are planning to merge that with the passenger vehicle business. So there is a lot going on in terms of merger and demerger, and we have seen some of these demerger and merger pains in case of banks like HDFC, right? So this stock in my view is going to be under pressure for the next 2 quarters and there will be enough buying opportunities because the stock may correct at that time. I could be totally wrong here. Please do not take this as a stock recommendation. I've given you my point of view and I see that there may be some more fall in Q1 and Q2. Maybe at that time I would plan to buy this stock, not right now. Now let me know in the comments whether you think this is the good time to buy Tata Motors or should we wait? What is your view? Let me know in the comments. I'll be happy to read your comments. And also if you like this analysis, hit the like button. Let me know in the comments a simple thank you. It will motivate me to continue to do analysis for you at zero cost. With that, let's move to stock number 2, which is from the IT sector, a company called Intellect Design Arena Limited. Have a look at my screen and you will see in the last 1 year, the stock has given close to 61% returns. Not many IT companies have managed to give you 61% returns in last 1 year. However, in last 1 week, the stock has corrected by close to 16% because of the Q4 results that the company declared. I did a detailed post on my YouTube member community and what I want to do is I want to break it down for you. I want to show you that detailed post so that you understand the benefits of becoming a YouTube member for my community. After seeing this post, if you want to become the member of my community, please go ahead and join my YouTube member community. You will learn a lot there. You will find the link in the description or in the pinned comments. Okay, so here is the post that you see on my screen and I have given the reasons for it, but few hypercritical points we need to understand. Point number 1 is why the stock has tanked. I've been tracking this stock for last 2 to 3 quarters and I've been reading their earnings presentation and the company has been constantly talking about 20% sales growth from the last 2 to 3 years and they have been achieving that. But this year when they announced the results, their quarterly revenues that you see on my screen only grew by 12.29%, which is not what the market was expecting. Market was expecting a growth rate of around 20 or 19 or 18 in that sort of range, not 12.29%. And this was the massive shock to the investor community and that's why the stock all of a sudden, immediately when the results were announced, all of a sudden the stock tanked by 16 to 17%. Coming down, point number 2 is then why do I like this stock? Okay, few critical points I want you to know about this stock. Point number 1 is that this company is operating in banking and insurance sector and the products that this company built. If I show you those products, what you will see is that these products are in corporate banking, consumer banking. You see the type of solutions that they build, core banking, lending solutions. These are all core systems that a bank or insurance company would need. These are not any discretionary spending that a banks would do. These are must-have spends from a banking perspective, from an insurance perspective. So even though the entire banking industry or insurance industry might be under pressure, this company is going to continue to make money because they sell core banking solution, core lending solution. I hope this point is very clear to you. Second big point is the predictability of their revenues. If you read this point here, what I'm trying to say is that the license revenues, the platform revenues they earn is a huge percentage of their total revenue. So if I show you the data here, out of 2,500 crores they did in 24, 1350 crore is coming from license linked revenues. These are predictable revenues. Once you onboard a customer onto your platforms, then you're going to get this license fee for a number of years, 5 years, 10 years, depending on the duration of the deal that you've had with the customer. Third key point is that company's EBITDA margins are very, very high from an IT standard perspective. It stood at around 22% in FY 2024. And this is mainly because, as you know, in every fintech, what happens is once you build the platform, once you build the product, then more customers you add, your variable cost is not going to go up. Therefore, your margins will continuously improve. This company is into that sort of business. Point number 4 you will see here is that in the last 4 to 6 quarters, company has been talking about and building a solution called Global eMAC platform, and they believe that this can take this company to the next level. Point number 5 is that the company is totally debt free. In fact, it is sitting on cash. So if I show you the number, 776 crore is what they are sitting on right now, which is great. And lastly, their management seems to be clean, honest and down to earth, because I've been listening to their earnings call. Now, if you look at the future prospect of this company, let's also look at the deal wins. So they are sitting on a funnel of 8183 crores, and I have not made this number up myself. There is data here. Almost 8,000 crore of funnel is what company is sitting on right now, and that has been consistently going up in the last few quarters. And second key point is that they have also launched their eMAC platform into the procurements and accounts payable segment with 3 new product launches. Lastly, their sales guidance for the next year is going to be slightly lower, 15%. We may see more correction in this stock. So please do not just go and buy this stock. Do your analysis, track the stock for a few days, and if you find good buying opportunities, then only you consider buying that. Do not take this video as a stock recommendation. I've given you a lot of information about this particular stock. Coming to the last point, which is around valuation. If I show you the data here, you will see that this company is compared with platform and product companies such as Oracle, PB Fintech, etc. And you will see that even after the correction, still it is trading at slightly higher PE than the industry PE, as well as a higher PB than the industry PB. So as I said, there may be some more correction coming in this stock. Moving on to the third stock. It's not a stock, it's a basket of stocks. I'm speaking about the Nifty IT index. Have a look at my screen and you will see in the last 1 year, this index has given close to 17% returns. But more importantly, in the last 2 months, from February 16th onwards, when the index was at 38,400 level, it has now come down to 33,000 level. So almost 15% correction in the last 2 months, which is a very, very decent correction. And what that correction has done is that if I show you the PE ratio of this index in the last 3 years, have a look at this screen and you will see that back in February 2022 or October 2021, at that time, it was massively overvalued because if you remember, we were in a bull run from an IT stocks perspective. It has come down now, and after this huge correction right now, it has come down to the median PE level of 27. So this correction has made it very, very attractive. Now, if we see the stocks involved in this index, you will see Infosys, for example, is 38% weightage, TCS, HCL, and majority of these companies, LTI, Pngtree has been down like anything, Wipro down, Coforge also down. So people who do not understand which IT company to pick, Nifty IT index presents a basket of stock opportunity for you. And right now, since this index has corrected by almost 15 to 16%, I think this makes a very, very good case to keep this in our watch list. In my view, in the next few weeks, this IT index is going to correct even further. So please put this on your watch list, track it very closely, and there may be some buying opportunities coming in the next few days. Please do not take this as a recommendation. And if you ever want to take an entry into this Nifty IT index, what you need to do is go and look at these ETFs here. There are a few ETFs here, bunch of ETFs here. Look at the liquidity. Go for high liquidity only, I would say. Expense ratio, for example, here ICICI Pru is 0.2%. Lowest is Kotak, 0.18%. Tracking error, if you look, I think in that case 0.03% is ICICI Pru. Have a look at these ETFs and go and make your own decision around investing in Nifty IT index only if you like this particular index. That's all in this video. This video has gone slightly longer than what I expected. There are still a hell lot of opportunities in the market to buy right now. I will create few other videos. So if you have not yet subscribed, consider subscribing now. Hit the like button. Let me know in the comments a simple thank you. And I will see you in my next video. Until then, keep rocking.